Good evening, everyone. Time for another silver update. Well, I've taken a lot of heat lately for my making a short-term paper bet against the silver price. May turn out to be right, may turn out to be wrong. I wanted to delve a little bit further into that issue. First of all, though, I wanted to look at the technicals here. I've drawn the major trend line that we are looking at right now that goes all the way back to the last QE2 back in late August of 2010, and you can see this trend line has pretty much held. There was this violation here. The reason why I'm drawing through this violation, as I pointed out before, is that if we draw through it, we get a number of confirmations here, 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 and where we are at right now. So yes, we could draw the line through this bottom, which only gives us really two confirmations, and that gives us a little bit lower price point to penetrate to indicate a downside price move, neither of which at this point have been penetrated. The other lines that I've drawn here are points at where we are crossing through the zero line on the MACD, and you can see I drew a similar point to where we are at right now. You can see we've just penetrated, the red line has just penetrated below the zero line, and the blue line is still above it. So we're moving down through the zero line on the MACD. This is one of the most vulnerable points you can have, and I've drawn parallel lines for similar times in the past. Here is a analogous time, and here is an analogous time. Now this one is obviously dropping very rapidly, almost straight down through the zero line. This one is more of an angle that we're approaching right now, and you can see that right after we penetrated, we actually made a bottom and rallied. So this penetration of the zero line actually was about a couple bucks from this top here, and then just maybe 50 cents or a dollar from where we ultimately turned and then rallied almost 100%. Now this line where we crossed here, you can see that the continuation down move, I think the bottom is right here at about 34, although the mid-range of it, it's hard to say because it was such a fast moving market with the May smackdown. So probably somewhere up here at 37.50 when we crossed, and we ultimately came down to 32.50, and then we bottomed. So I'm still holding my AGQ put, and I'm going to address the AGQ again, but if we manage to cross through this line without significant downside penetration of these support lines, trend lines, it's a possibility that we may rally just like we rallied here, or if we get good downside penetration, we may bounce around 35 or 32.50 and then get one of these rallies. So the MACD is starting to shape up into more of a bullish scenario because it is corrected so much from there to there, while the corresponding price correction has really only been from here to here. So the price is not sloping at the same depth that the MACD is, and in that instance we could actually get down fairly low and rally from a higher point. So that's always a possibility. I wanted to jump over to the AGQ position to make a point here. As I pointed out in my last video, I did a lot of analysis of what I would want to use as a vehicle to try to generate some short-term paper profits. Again, this is paper. We're not talking about shorting physical silver. If you know a way of shorting physical silver, I sure would like to find out about it. That would obviously be someone loaning you the physical and allowing you to sell it. I never heard of that happening, so maybe the bullion banks. But back to this topic of the AGQ. If we go out to the longest view, of course, the AGQ, which is, someone did correct me, I thought it was a triple ultra silver. It's actually a double ultra silver, so it's twice the price. So if we go out it kind of fairly well holds from this long view. You've got about a 300 and something percent gain on the SLV, which I'm using that as a proxy for the price of silver. It's fairly close. It's under the price. It's always under the price of silver, but it's a decent proxy for the price of silver. And then we've got the AGQ, which is more than twice that price. Now, I put my position on earlier in the, within the last 5 days, and I wanted to point out that we are seeing a decay in the AGQ. And I've gone over the ETFs in the past. You're always going to see a decay. This is actually encouraging for me to see the AGQ begin to decay as opposed to the SLV. If we pull out to the 1 month, you can see the AGQ is down 15% and the SLV is down about maybe 7.5%. If we pull out to the 3 month, now the AGQ is still higher, but it is falling down through possibly penetrating. So it's just different as you look at different time frames. This time frame out to the 6 month is a very interesting time frame because you have the AGQ that is, they both started at 0 here at this point in time. And at the point in time that we're at right now, from March, roughly March of this year, you can see that physical silver from that date is up approximately 10%. Now the AGQ is down. It's actually a little bit negative there, so it's around 0. We'll just say that SLV is up 10% and the AGQ is down, is even. So it's 10% lower. Now the question you'd ask yourself naturally is, well, isn't this a 2 times silver ETF? So if the SLV is up 10%, shouldn't the AGQ be up 20%? That's kind of what you would expect. But you can see it's different in these different time frames. Here's the year to date. They seem to be even. Here's the 1 year, and you can see that the AGQ is significantly higher, but not 200% higher. So these things vary. When you get a very dramatic move up, you obviously get a much more dramatic move up in the AGQ. So only on this dramatic spike where we had silver run to almost 50 and the smackdown in May did we actually get the AGQ move more than the 200%. So what I'm betting on is the decay in the AGQ is going to be greater than the decay in the silver price, and so even if I'm wrong, I'm not going to get too hurt by that. So on that same topic, I wanted to go over to the latest from Clive Mond, and he's updated his call. He says silver has fallen back over the past week as expected, and although its uptrend from late June has now failed, which he shows that on this chart here, considers that a failure. Mine actually doesn't show it as a failure yet, but his does show it as a failure. Has failed, which is viewed as significant. It managed to hold up above nearby support, which may generate a bounce early next week. However, this should not be a cause for celebration by silver longs, as overall the picture for silver continues to look precarious in the extreme. We can see why on the year-to-date chart below, which shows that silver appears to be completing the B wave. Now he goes into this Elliott wave stuff, which, if you remember the last time, he said that, well, we can't. It's not very predictive. The only thing we really want to use is other technical analysis. So I don't know why the Elliott wavers always talk about Elliott wave, which is, in my opinion, a worthless theory. But let's go on, and because he has had some really good calls, let's read the rest of what he says. On its 6-year chart, silver looks like it's completing a classic large top formation. First, it rose vertically to hit its most overbought levels late in April, since the good old days of the Hunt brothers back in 1980. Then a panic sell-off hit, triggered ostensibly by hiked margin requirements. Ostensibly? That's, I don't know. I think we pretty much documented that it was a surprise. Multiple margin requirement hikes in the middle of the night on a holiday when only Asia was trading, so I don't know why he would say that. Of course, it's being insanely overbought had nothing to do with it. Well, overbought, what does that mean? I'm not really sure. That's a relative term. All of which was accompanied by a huge volume characteristic of a top. Actually, no, I think he's wrong on that as well. The huge volume really entered in on the downside, although it shows here on his chart a huge volume. That's not correspondent with this spike, it's actually correspondent with this drop. So there was some volume here, definitely higher volume, but from my charts that I've checked, the huge volume came in on the downside. When you look at his charts, it seems to be about even, so we'll give him that. And he says, the huge volume characteristics of the top. Lastly, the Johnny-come-latelys are corralled into silver by peripheral cheerleaders to drive the weak rally back towards the highs that we have seen over the past couple of months. I'm not sure who he's talking about here. I'm unclear as to who he would consider the cheerleaders. He must not be referring to the mainstream press, because the only time I remember silver being reported in the mainstream press was in May when they smacked it down, and then everybody and Don Harold and his brother came out and said it was a bubble. I don't remember any cheerleaders, so that's another thing that makes you wonder about Clive here. There's just one installment left to go. The drop down to the support shown at the lower boundary of the top area, the failure of that support, and the final devastating plunge that leaves hordes of silver speculators hung up in the large top area and smarting from silver losses. So that's his latest update. This one seems to be a little bit more biased, so I'm really starting to wonder about Clive, although I have to give him credit for his call in May. But I've pretty much made my decision on doing a quick paper hedge based on my technicals, not on his. But it's interesting to see where he's coming from. Now, the last thing I wanted to look at is over at Gainesville, because we always want to keep our eye on the physical, because, of course, those of you who follow my channel, especially those of you who have joined lately or are fairly recent subscribers, obviously you would like to see silver plunge. If you really agree with me that silver is the most undervalued asset in the history of the world, then it would make you much more comfortable to probably get a plunge down to, say, here at about the 31 level, or you'd like to see us come down here. Actually, I hope for your sake, not for my sake on my short-term paper profits, but for your sake, that we do get this drop down to either 31 or 21 so that you can get an opportunity to get in. Because as we look at Gainesville, this is the supply at Perth. So I've chosen Australia, silver, and 1 ounce, and you can see we have 18 results. I've set the page to get them all. So we're going to discard the worthless ones, and that is proof, proof, graded, proof, colored, graded, proof, colored, graded, proof. We've got a 5-coin proof set. We've got a high relief proof. And here it is. We have some 1 ounce rabbits. That's it. For $61.53 or $60 if you pay by bank wire, you can get yourself some silver bullion from the Perth Mint off of Gainesville. That's it, folks. That's all that's available. So, as I covered in my bottleneck series, that's obviously a bottleneck at the Perth Mint. You can go into any number of explanations of why that's the case. The bottom line is this: the Perth Mint isn't meeting the demand. They haven't met the demand for their silver coins for a long time. I'm not really interested in speculating about it, because it's obvious that either A, they feel that they're selling silver at a loss, B, they're trying to pump it up by creating an artificial shortage, or C, they're just simply part of some cabal that wants to prevent people from accumulating physical silver. So I don't know why the Perth Mint is doing what they're doing. If this is a real business out in the real world, if you imagine if you're a businessman and you had unprecedented demand for your product and you also had a decent markup so you could make a very nice profit on that product, obviously you would want to move as much of that product as you possibly could. You would try to get as much of a markup as you possibly could, and you would retool, restructure, redesign, whatever you need to do to meet the demand, because obviously you're making tremendous profits. So something very fishy about the bottleneck at the Perth Mint. So we want to back out and choose all countries and do 1 ounce silver, and we'll just do all modern coins. Actually, let's just do the 2011 gold and silver releases and see what we get there. So we'll do a search on that, and we get exactly 9. So we get our monster boxes of Philharmonics. That's about 21 grand. These are 500, so you're over 40 bucks there. We've got our, that's more silver Philharmonics. We've got some Canadian Maple Leafs. These come in tubes of 25. So we're looking at 25 times 40. Again, a little bit over 40 bucks for the Maple Leafs. And we've got some Chinese Pandas. Those come in a box of 600. So we're talking 40, more like 45, closer to 45 bucks for those. And then we've got those rabbits, and that's it. Now I think there's some eagles, single eagles or tubes of eagles out there, but that's pretty much your selection at Gainesville. I don't have time to go and check APMEX, but that's pretty sparse. It's really surprising to see silver trading at what is some would consider a relatively high price, and yet see so little product available. Because if silver is really so high and is due for correction, which I think they may do a paper correction, but if silver is really that high, wouldn't you think that there'd just be a ton of product out there so these guys could make all that profit? After all, they say it only takes $5 to get it out of the ground. That's one of the things they always throw about. So obviously there's something fishy in the silver market. There still is something fishy in the silver market, and we're looking for a paper smackdown that may or may not come. At some point, when whatever comes, we're going to find ourselves in a bottom situation. We just don't know where it's going to be, and that's going to be a point when you want to buy whatever physical silver is available, and so you can just keep stacking for the eventuality when silver goes to the moon. And we'll talk to you next time.